Welcome to Bears in Exile. Today is Thursday, December 29th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. So, interesting day. Moved up. Pretty much negated the entire downward movement of yesterday. Here we are with the Dow. We had the downtick yesterday, giving us 4 days to complete its target, and so 3 days remaining. Are we going to hit that downtick target? Yeah, it's still entirely possible, but very nice day. Very nice day. It was kind of strange, but nonetheless, nice day. Getting back above the upper price consensus level. We still have the 14-day moving average still ticking up. We still have the stochastics kind of just perching and hanging out, waiting for their opportunity to go down. Uptick on the RSI, uptick on the CCI, uptick on the MACD, and a ever so slight uptick in the MACD histogram. So I was thinking that we were going to have some kind of a minor dip and then continue the upward movement. Well, that was wrong. We absolutely did not get further downward movement from yesterday's action. We just went straight for the up. So that's fine. We can see from this chart that the 14-day RSI moving average is still pointing up. We want to see that get all the way to the top. If the stochastics want to hang out there the entire time, that's totally fine. All that we want is a proper setup, and that's why I didn't play today. There isn't really a cut and dry proper setup. I wanted to buy on the dip, and the dip didn't come, so just wait for the next setup. For fun, I'm going to do all of the time frames tonight on the Dow just to give some perspective as to what's going on here. Here we are with the 180. We can see the 14-day RSI moving average way up high. Now this is going to roll over at some point. We can see that the stochastics are going up to meet it. So it does have some room to go to the upside. It has some room to move with the stochastics. You can see that pretty much everything is either high or pointing high. MACD histogram arching up, CCI pointing up, RSI being the party pooper and pointing down. We could actually get some divergence on this should we get a new high tomorrow. But short-term moving averages pointing up, not too bad. The point being, here in the 180, we can see that we're already going to have some sort of a top in the 180 in the not too distant future, so we have to be aware of that. Going on to the 60-minute time frame, you can see that the 14-day RSI moving average is already moving down, and the stochastics are going against it, but they are setting up also for a move down. So 60-minute time frame, we should have a move down at some point in the somewhat near future. You can see the CCI getting overbought. You can see the RSI just getting to neutral, and uptick on the MACD histogram. Whether we make a new high or not in the 60-minute time frame, we will most likely have a lower high over here, which will be a negative divergence in the 60-minute on the MACD histogram. Something to think about when it comes due that this stochastic it's time for it to roll over and meet up with the 14-day on the downside. 30-minute time frame. Well, we can see that the 14-day is on its way up. The stochastics are already high, and everything else is pretty much high with the histogram starting to slope down a little bit. So certainly in the much shorter time period, there is more room for the upside, which would be setting up that negative divergence in the 60-minute time frame. So it's all about connecting all the dots and waiting for the right moment. It's all about waiting for the right moment. 15-minute time period. We can see that the stochastics and the 14-day RSI are already very high. All that they need is a catalyst to move down. CCI massively high, RSI massively high, histogram sloping down. If we get another little pop up, we'll even have a negative divergence in the 15-minute time frame on the MACD histogram. So, put it all together, 15-minute, ready to go down when it finally gets its break to the downside. 30-minute time frame, more on the upside, but already matching up for a move to the downside in the not too distant future. 60-minute time frame, just waiting for the stochastics to roll over and it will meet the downhill motion already in effect. 180-minute time frame, waiting for the stochastics to line up with the 14-day RSI, which is already massively high, and then it'll be free to start its down move. So, in the short time frame, I would see that certainly we have room for more upward movement. But shortly after that, we should have alignment in multiple time frames, which say we should have a move down. Is that going to be the end of the first week of January? Is it going to be the second week of January? Are we going to get stuck up there for just a little bit and have it be the third week of January? We don't know at this time, but we're going to know as time marches on that we're getting closer to it. So I would say be very cautious. And that's one of the reasons why I was looking for a dip early on today and it didn't come and I was going to buy it. Well, everyone else bought it. So there it is. SPX, more of the same. 14-day RSI moving average pointing up. Stochastics getting ready to roll over. Short-term moving average is pointing up. We busted through the 200-day moving average once again, which is not really welcome, simply because we do not like whipsaws at the 200-day moving average. That's not friendly. Now, certainly, with the pop-up, which should be due in the very soon future or immediate future, are we going to be able to break the recent high? Yeah, I don't think so, but if we were able to have what would look like a definitive break of this previous high and not this little doji candle, that would catch a lot of people and make them think that it was time to go to the moon right as all of the confluences of the multiple intraday time periods line up for a move down. So anyways, but then on the flip side, we have talked about the inverse head and shoulders. Who knows? Maybe even that would be enough. But regardless, all kinds of things to look at, all kinds of things to weigh, consider, etc. And just want to point them out. And the VIX, oh yeah, it didn't have a very nice day. We haven't even had our retest of the 200-day moving average. We really should have that at some point. You could say that maybe this was it, but really we should have some distance in between where we are and then go back for the test. Maybe that will be the retest will be the down move in the second half of January or middle of January. 14-day RSI moving average, we keep watching this one. We still do not have an uptick on it. The stochastics are attempting to go all the way to the top and most likely roll over, come back down, and then we'll have our move in the 14-day RSI. But still, histogram ticking up, MACD ticking up, looking for the bullish cross, RSI getting to oversold, and not quite at the neutral on the CCI. TNA, man, I could have played this one a couple times in the last couple of days, but just haven't. It's been too weird. Big ugly move down yesterday. Got a nice up move today. 45.56. 14-day RSI moving average still pointing up. Just like the Dow, just like the SPX. I'm going to move on to what really matters, which is UUP and FXE. Well, nice little move down on UUP. Very positive for the market. We can see the 14-day RSI moving average once again curling up slightly, with the stochastics trying to turn around and go back up, which would be poor for the market. CCI up, down on the RSI, up on the histogram, up on the MACD. Certainly, strength right here in the dollar is not good for the market. And we are starting to get some separation in the short-term moving averages coming back up and spreading out once again. Middle Bollinger Band line still in the upper portion of the short-term moving averages, but regardless, if we're able to get a strong angle on the 14-day RSI moving average, and the stochastics completely turn around and go up. Not good for the market. Now, we shouldn't read too much into it because we can see this entire area right here where it has essentially been flat. It is turning up, which does suggest that it will go up. However, we could have more of this action, which would be, just treading water, staying in place, and on low volume, the market can do whatever it wants in that environment, as evidenced today. FXE, the euro. Bounced right off the lower Bollinger Band. Look at that pinching action with the Bollinger Bands. If these come in too much, it means that we're going to have a significant move sometime in the near future. 14-day RSI moving average still pointing down. Stochastics trying to go down again. CCI slight tick down. RSI slight tick up. Uptick on the histogram. Uptick on the side tick on the MACD. Kind of trendless, but we can see that it is running out of space. It's running out of time. So there is going to be a significant move very shortly. GLD. Ugly. Look at that. Short-term moving averages pointing down, getting more separation. Strengthening of the long-term moving averages. We had our test of the 200-day moving average and it failed. CCI oversold. Absolutely. If this were to turn around here, we would have a positive divergence in the CCI in the daily time period. Same thing with the stochastics. 14-day RSI moving average increasing its angle to the downside even with a positive day, although we did have the big gap down. Uptick on the RSI massively oversold. Downtick on the histogram, downtick on the MACD. Just waiting for this to finish its move to the downside and curl over. And who knows when that's going to happen. Shouldn't be too long, but the talking heads are saying, oh, the bull run of gold is over. We're going to go back down to 1,200, 1,000, whatever the case may be, that the multi-year bull market for gold is finished. And I kind of find that hard to believe, but we shall see. SLV gapping down below the lower Bollinger Band and getting back above it. Short-term moving average is still pointing down. Downtick on the 14-day RSI moving average. Stochastics very, very low, very oversold. Oversold in the CCI, and definitely we could have a positive divergence set up here. Certainly we have that already moving back, more distance into the past. Downtick on the side tick on the histogram and the MACD, uptick on the RSI. So really we do have a lot of conflicting signals. Absolutely. And it's not exactly a fun place to be. We want the signals to be clear. Obviously we have some signals that a bump up of some amount is more than possible running into the middle of next week. But we also have signals showing that we should have alignment for a bearish move following that. All subject to the news and NDEs, but there it is. That's what we have to work with. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.